Good evening, traders. Good evening, account builders, and good evening, everyone else. This is Ant-Man here, and I'm coming at you with a trade recap. I'm a little late in getting this trade recap up, but that is because it's a recap from a trade I took on Monday. And for any of you that watched my video, I believe it was video number 9 or 10 from Monday, I was totally wiped from a combination of an arduous trip into the city and the cold weather and a bunch of other things that all just happened Monday. Wound up falling asleep, around dinner time, and actually slept more than I wanted to. But I just didn't get it done that night, and I wanted to get this done and get this out there. But I think there's some really good tidbits in here that you guys can learn from and all that. So, with that said, let's get into it. The trade I took on Monday was in Sage, S-A-G-E, Sage Therapeutics. And what I had noticed was, before I noticed this humongous gap, what I noticed was the news as I was filtering through, as I was going through the news in the morning in the pre-market session, as I always do every morning. I saw the headline that Sage Therapeutics met primary endpoints. Primary endpoints are basically when a drug company or a biotech is trying to come out with a new drug, they set goals and targets for those drugs, and if they meet those goals and targets for that drug that they have on clinical trials with the hopes of getting an FDA approval down the road, if those goals and targets are successfully met, those are what are called primary endpoints in a nutshell. So when a drug company or a biotech meets primary endpoints, it usually is very good news. It means that all the goals and all the targets and all the whatever they had planned and forecasted and thought may happen or will happen or wanted to happen with this new drug that they're testing out, all did happen. And when investors hear that, when the street hears that kind of news, it can cause a flurry of buying action. It can cause a tremendous gap up, which is what it did here. This thing gapped. It closed at $97.55. This thing gapped up to $139. That's like a 40% or a 35 to 40% gap up on a $100 stock. That is ridiculous. I mean, it was even a bigger move than I've seen in quite some time on biotechs that met primary endpoints. This was a huge move. So my immediate gut reaction was pop and drop. Pop and drop. This is gonna draw in a lot of enthusiast buyers, a lot of chasers that just want to get in on the new hot news right at the bell. And that's usually what happens with these FDA approvals and these primary endpoint plays, especially on the higher priced stocks. If you get in primary endpoints met on a $3 or a $5 biotech or some other penny junker, may not happen that way. But on the higher price stocks, like we're talking Sage, we're talking, GILD, Lilly, any of the higher priced, bigger companies, more quote unquote proper stocks, you're usually going to get a pop and then a drop on these things. It's going to pop on hype. It's going to pop on chasers trying to get in to join the trend because their FOMO sets in. They're like, holy shit, this thing just got up 40 points. Let me get in on this and see if I can capture a little bit of that. So it brings in those buyers. And in the case of Sage, if I pull back on the daily chart, you can see that this has been downtrending since late August. So there's quite a number of shorts trapped in this stock, which is also going to fuel the pop in the morning on short cover, because now you have a lot of, I'm not going to say the shorts from up here, but maybe you do have some from way back here. But a lot of the more recent shorts on this gap up are very much underwater. So they're going to be covering also, panic covering. So those three things, my immediate thought on this was pop and drop, and this immediately went to the top of my watch list. And that's kind of plays into what I always say when I do a preliminary watch list the night before. If something better comes along the following morning because of news or on my gap scanner, it may push some of the preliminary plays off my list. And that's exactly what Sage did. I had my list going, and then I saw Sage, and I knew this was going to be my play. I knew that I was going to wait for some type of support to hold at the open, and I was going to take this long and ride it up. So let's go to the, let me pull up this right here. This is what I use sometimes. It's a 15-second and a 1-minute chart side by side. And on stocks like Sage, which are a higher priced, lower float stock, it helps, at least in my opinion, it helps me get better entries. Because these things, they're higher priced, the float is lower, and they can really move on you and move quickly. So to help me try and really pinpoint a better entry on stuff like this, on stocks like Sarpeta, SRPT, another high price, low float, probably the granddaddy of the high price, low floats, Tesla. I always play that with a 15-second and a 1-minute chart open. It just helps me really just gauge my entries better, because there is so much range, and there can be a lot of volatility in these types of stocks. So I do use that. I don't always use such a fast, granular time frame, but in certain instances, it really helps me out. So with that being said, what I had marked from the daily chart is this 144.34 level. As you can see, if we go back to the daily chart, that's the high of this big candle right here. And this 144.34 also ties in nicely with this area right here. This support becomes this resistance here, and that number is 143.77, 50 cents away. It's a nice tight range to watch for a rejection. 143, we'll call it 143.75 up to 144.30. 50, 60 cent range on $145 stock is a nice little area to look, little zone to look for some topping. Excuse me, I'm so short biased. A nice little zone to look for support to hold for a potential play. So back to the 15-second 1-minute chart. I had these little areas marked. Sometimes I'll draw an arrow or I'll draw an X on the lines like this just to bring them to my attention that these are the lines that I am watching. These are the price levels that I am watching very closely. So this is the 144.34 from the daily chart. This level here, this is actually the daily 200 SMA. Okay. This purple dashed line, this is the high of pre-market, which as you can see it follows it up, and the high of pre-market was right here, right at this 144.34 level. And what other level, if you look right here, do we have at 144.34? We have the opening price at 144.34. So we have three very strong, three individually very strong levels of support and or resistance. We have the pre-market high, we have a daily level, and we have the open price. And they've all converged at the same area, 144.34. So when I saw this setting up, I said to myself, I'm not going to jump right in. I'm going to give this a couple of candles and see what happens. So I'm watching it on the 1 minute and I'm watching it on the 15 second. I want to see what this does. I want to see that this area here will hold as support, and that's where I will take my trade. So looking at the 15-second chart, what we had going on here and what I saw is two things. One, we had a bull flag forming right here. Nice little, morning volatility. Then a little pop, a little pullback to support. And if you look right here, look at how many times this 144.34 held here. This low, this body, this body. This candle kind of straddled that level. Then when I saw this little buyer's candle form, that's when I made my decision that as soon as price breaks above this this line here, this slanted line of the bull flag, I'm jumping in long. And since it is a very very volatile mover, this thing can move mountains on you. I only took 100 shares. I certainly could have taken 1,000 shares and made an absolute mint, but that would be going against my rules. My rules right now say on a stock like this, I trade 100 shares, and that's part of the process. You can't rush the process. Even if your head and your heart say go for it, you have to be firm and steadfast and stick to your rules and follow your plans. And like I said, my rules say right now, at this point in my trading, I am at 100 shares on a stock like Sage. If this were, say, Nvidia, which is also $150, give or take, well, actually it's a little bit lower, but Facebook, we'll use Facebook. I think Facebook is closer to 150 on top of my head. Facebook, I would take probably 500 or 600 shares because it's not as volatile. The spreads are better. In fact, the spreads are usually no more than 10 cents on Facebook. The spreads on Sage could be upwards of $1. So usually they're around 70 or 80 cents, but it's still kind of spready. The float is massive on Facebook. Facebook is not going to pop like this right here, 147 to. It's not going to pop 4 points on you in one candle, and really cause you to have a big red trade, unless there's some kind of crazy news about the company or some kind of macroeconomic event. Facebook is what I call safe. It's not going to do that to you. So I'm okay taking 500 or 600 shares on a stock like Facebook, which is in the same price range as Sage. But because of the volatility that I know Sage can possess, I only will take 100 shares. So enough on that. So when this candle right here broke over the flag, I did get it for 100 shares to the long side. I did cover on this. I'm sorry, I keep using short terminology. I am so short biased. I rarely ever take a long. I think my last long trade was back in November. In any event, when I got in 100 shares right here, right around the 145 level, at this this seller's candle right here, I did sell half my position, and I let the other half go, because I kind of had a feeling that this had more in the tank, and I kind of set my stop right around here, the high of this big candle here, or the close. This little range between this $1 range was my cut and run area, and as you can see, it basically came down to this level here perfectly. If you draw a line right across, you can see how this level of resistance now became support. When I saw this red candle form and hold this level, I was put a little bit more at ease that this was going to continue upward, because this area of resistance did become support right here. So I just relaxed and I sat back and I let the trade work. On this big pop here, I believe on this third green candle here, I covered 25 more shares. And then as it started coming back down on this red candle here, I sold the rest of my position. So all in all, from my entry to the highest point, I did catch around 11 points on Sage. And this was a very, very nice long trade. And to be honest, it felt good to get in on a long trade that worked out as nice as this did, because I do take so many shorts. I am a shorter at heart, and 98% of my trades are to the short side, unless I'm playing the actual market. If I'm playing the SPY or the Qs, I will take what's setting up. But if I'm playing equities or I'm taking Options trades, I'm definitely way more short biased on those. Short biased, put biased. To have something work out this nicely, and to illustrate the proper use of support and resistance and levels, I just think this was a nice little trade to put in my in my book of trades. So that's all I have for you on this. It was a nice quick little trade. It was my only trade of the day. This was a one and done type situation. So that's all I have for you on this. If you have any questions or comments, you can always leave them down in the description below. And you can always hit me up on Twitter. My handle is @TheTonyManji. And that's all I have for you on this. So you guys have a great night. And I'll see you on the next video. Take care. Ciao.